Welcome, everyone, to episode number 23 of the Intersection 4 podcast. You have your usual suspects here. We have Brendan, founder of Athena. You have me, the founder of Adon, and Hamis, a partner at Plutus 21. Very excited to come here and talk to you guys one more time. Today we have a couple interesting topics. We're going to be talking about some interesting new breakthroughs happening in AI, more like what's cooking in some interesting research labs out there. Of course, we need to talk about tariffs. Of course, we need to talk about the entire drama that has emerged in the stock market over the last, I don't know, several weeks. And also, we're going to touch on a few more interesting topics here and there as we navigate these two big conversations and these two big conversation areas. So, where should we start? Should we start with AI or should we start with tariffs?
I think tariffs we can start with and kind of get it out of the way, and
Okay.
then spend the rest of the time on what actually matters for our future.
All right, James, then let's start with you, man. So you're the one here who runs a fund. You're the one here who manages capital at large. So definitely curious on how you played it out, how you saw it happening. Good. This is good. I like this. Walk us
Yeah.
through this.
So I think it's a little crazy, uh, but it's like this every 4 or 5 years. What ends up happening is the market just becomes a vehicle to transfer money and transfer wealth from people who are impatient to people who are patient, right? Like this is the human condition, right? And every 10 years, every 5 years, it's the same thing. And you just see it so many times where you start seeing the same pattern. So the only people when this whole thing was happening that were, totally freaking out, totally changing their 10-year plan down to a 6-month plan were the ones who were brilliant at what they did, but did not spend a lot of time in the market, right? They were not professional investors. And so professional investors obviously just like watch this stuff so much more that they build a sense of like what's actually happening. And the same thing happened in COVID as well, right? The people who like, took they made a plan 20 years ago when their kids were born. Hey, we're going to do this X, Y, Z at this time, so that when our kids are in college, we've set up a future for them. All of that goes went out the window when COVID happened, and that's why the best performing, investment managers or investors in general in COVID were either the ones who just didn't do anything and just stuck with the plan, or were the discretionary, like professional managers who went and doubled down at the bottom and saw that V-shaped recovery, right? And so I think um, I think this is one of those things where there's a lot of research on it, where the value of an investment manager or a wealth manager in particular is less like their ability to you know understand and time the market. It's more their ability to manage your emotions as one of their clients. That coaching and ability to kind of just say something as simple as, hey, like, remember when 20 years ago we set out a plan? Like, we're going to stick to that plan. And they actually earn their keep by doing just basic things like that. And separate from that, they obviously have to be good managers and good fiduciaries. And so I think a lot of people kind of saw through what was happening with the tariffs as, at best, some, negotiation tactic, but at worst, like some, rushed plan to appease some part of the population. But, China has a very different economy, a different government system than what we do. And so anybody who understands China understood that we could have hiked the tariffs to 1,000% and you would have gotten no reaction out of them. As
So let me let
yeah,
me let me ask you a quick couple follow-ups here.
yeah,
So I guess basically what you're saying is that the play was do nothing, right? Or double down, one of the two, right? Like to be able to tell that this was just noise, just a blip, and then to just move on, right?
yeah, because doing nothing is also doing something, which people forget, right? People feel like they have to do something when something's happening in the market, but the simple decision of doing nothing is also a decision, right? But sure,
But
yeah, I
here's
agree
the
with that. I agree
here's
with that.
the tricky part, and I want to hear both of you guys' thoughts on this. if you make the really bad choice of spending any time on Twitter, or any time on like the public discussion forum,
I'll see
everybody
that.
is shaping the narrative to basically say, "Oh, this is the end of the free world. Free trade is gonna die after this," and everyone is like trying to find somewhat compelling arguments to say, "Hey, this changes everything, right? Everything that happens on a weekly basis changes everything." And I think it's not trivial
Okay.
to be able to look at that and say, no, this does not change everything. I think you all guys are overreacting. I'm going to double down or I'm going to do nothing. And most of the time that plays out to be like the correct move, right? But my question for you guys, both from like the founder perspective and also from like an asset manager perspective, is how do you how do you call BS when everybody's freaking out? When everybody's like shaping the narrative that like, oh, this actually changes everything. Free trade now is dead, and then economic relationships in the world are gonna fundamentally change because of the tariffs. How do you like? I
Yeah,
guess for lack of a better word, I'm asking, how do you not freak out?
Mhm.
I was gonna. I'll answer your question, but it's funny because as you were talking, you kind of made one of the points that I was gonna make, which is it almost reminds me of the AI craze in the last year. It's like every 3 months there's this new we found AGI moment on Twitter, and the answer to your question for me at least is one. I've never been into Twitter, and like not for a good or bad reason. I just have never like struck me as like the social media of choice. And then two, I moved to New York, not San Francisco. So just by those two things alone, I don't get the feed of what I should know. So then every day I wake up and I do some reading on the publications that I read, talk to people, test new libraries, and I come up with my own opinions. And then
Mhm.
maybe every few weeks I might go to a dinner with a bunch of other founders that are here from San Francisco visiting, and they're like, you know, why this, why that? Like, can't believe you don't use this library. And I have all these great reasons why I don't use the library, and for them they actually don't have the same like
Mhm.
maybe doing your homework experience. And I don't know if that fully applies to
It
the
does.
rationale around China or tariffs, but for me at least the experience has been if you're kind of outside the bubble you don't run the risk of actually getting swept up.
Yeah, of the group thing. I completely agree. And like something as simple as, my partner, his wife is Chinese. Um, Honestly, like that's one of our biggest advantages in this type of situation. She's like, hey, listen, guys, to her husband, not to me directly. The Chinese are not going to flinch here. Impossible. They have a cultural, political, like every reason in the world, they will not flinch. And we know, knowing our administration and our politicians in general, they don't have a backbone like that, right? And so it's like, who's going to flinch first? Who's going to call bluff? And it was not going to be the Chinese. It never will be, right? And so it's just like those basic cultural things. Like we didn't come to that conclusion sitting on Twitter. We came to that conclusion, like Brendan is saying, like completely kind of outside the bubble. And it is hard to be a contrarian in anything if you are, reading this stuff every single day.
Absolutely.
You have to create your own kind of thoughts and your own thesis and then test it against other people. It's not to kind of live under a rock. That's not what the goal is. But the same way that Brendan is able to kind of create that independent thesis because he lives and breathes this stuff, there are investors who live and breathe this stuff and they can create an independent thesis. And that's the only way in markets or really anything where you're competing with a lot of smart people is to win over time, you have to be different. You have to be a contrarian.
I think I agree with you guys 100%. And reflecting back, I definitely think that some of the best product choices and strategic choices and even asset allocation choices that I've made were when I was not looking at the public forum, when I was not looking at Twitter and so on. And I think the very insidious part of these platforms is that they make you think like they make you feel like you're an independent thinker by agreeing with what everybody else is saying on those platforms because everybody's claiming to be an independent thinker. So on this podcast, for example, we could actually go and analyze all of the underlying causes and motivations for the tariffs and talk about trying to move manufacturing jobs back to the US. And we could spend hours here just debating on the bigger geopolitical ramifications of these moves and so on, and frame it as like, yeah, this is going to change everything forever, whatever. But I think the reality is like most people just have no freaking idea, man. People just don't
Yeah.
know. Like everybody, literally, I genuinely think that this goes all the way up to like the president of the U.S. Like people don't know; they're just winging it, and they're just like figuring it out as they go.
Do you do you feel that it's because of the 140 characters? Like I'm trying to think in my head. Like
Mm-hmm.
do you if is it longer form podcasts, longer form blog posts, content? Do you think if you like drink from that fire hose, you actually could like come up with pretty first principles ideas, or is it
Maybe,
just yeah?
maybe, but I think it's just like the short form content doesn't really contribute, right? But even though you can make longer posts and go and have people like watch longer videos or listen to longer podcasts, I think the crux of the matter is that everybody in a public forum is trying to seem like they know what they're talking about, when
Yeah.
the vast majority of the time they don't know. And not
But
only do they
it's
not
hard to
know,
look smart when you're talking for more than 10,000
absolutely,
characters. Like
absolutely.
the longer the characters,
Mm.
it starts to weed out a couple of those
Yeah,
noises.
yeah.
But
And but
especially in
as
these
the
cases,
audiences, yeah, go ahead, Sam.
sorry, just to wrap, like especially in these cases, the talking about the tariffs, like you can talk and analyze tariffs from like a geopolitical or macroeconomic perspective or whatever you want to do, but when it comes to predicting the future, nobody knows. Nobody has any idea, but everybody's trying to sound like they actually know. Like, I mean, you can go and I actually went through and I read a lot of Ray Dalio's posts, and Ray Dalio has his like agenda where he's been saying for many years that the U.S. is about to like fall apart, and then the U.S. is not going to be the leading world power anymore, and so on. And I actually read a lot of his long form posts, and you can argue that Ray Dalio is very intelligent and really good asset allocator. I mean, he manages like one of the biggest, or if not the largest, asset fun in the world. But anyhow, the point is, even that guy, like, he just doesn't know, man. He just doesn't know what's gonna happen. So I think that's like the foundational uncertainty that people need to be aware that everybody has, and everybody's trying to sound really smart. And if you just buy whatever you're reading, you're probably
Yeah,
just
and
like,
every generation has that. Every generation has this. This is the thing that's going to change the future, and it actually doesn't have as big of an impact as everybody thinks. And some, at least from a market perspective, I'll explain why with these charts. So this chart is, since the S&P 500 was started, if you'd invested $100 in the S&P 500, today that $100 would be $1.2 million. And all you had to do was just buy the S&P 500. There were wars in here. There were nuclear bombs being dropped. Like all the things that you could possibly imagine that could go wrong happened here. And all you had to do was sit here and just invest. Now, this is the chart that everybody's seen, and this is why they invest in the S&P 500. The reason I think investing consistently is it works so consistently over time is not actually this. It's the reason it works so consistently is this. So what you see actually is the question. If you just look at this chart, it looks like okay, investing in the S&P 500, most obvious choice, right? Over time, just consistently invest. But the real question is how much of the return came from the numerator, which is the value of the S&P 500 companies going up, and how much of the return came from the denominator, which is the value of the dollar going down. And if you separate those two out, this blue line is the nominal rate of return. This orange line is the real rate of return. So what you're really saying is that 95% of this blue line is simply because the dollar just keeps going down in value. Only 5.47% of this return is because the S&P 500 companies are actually going up in value. Okay, people won't show you this chart because it tells a story of like essentially a certainty. Because as long as you believe that inflation is a consistent thing that will continue happening over hundreds of years, then you should just be investing in the market consistently, right? Because 95% of your return is going to come from inflation. And inflation, I think everybody can agree, no matter what side of the aisle you're on, no matter what part of the world you live in, that inflation is a consistent thing. And you can actually see the real divergence happening right here in the 70s.
71, yeah, when
Yeah,
the US stopped the gold redemption and went fiat. Yeah.
exactly. So that's the point, is that I don't really care about your opinion on what's going to happen to the S&P 500 companies and their earning potential, as long as we can all agree that inflation is going to be a consistent factor moving forward, then investing in the market is probably a consistent and good way to make returns. So those are
That's
just my thoughts.
phenomenal. That's phenomenal. I think it's a good segue into Bitcoin because something interesting that happened over the last couple of weeks is that, frankly, for the first time that I can remember, um, there's the price of Bitcoin over the last 6 months, particularly looking at the last month. So we were at 86 or so, had a little downfall, and from a low of 75K at the beginning of this month, all the way up to 93K or so right now. And then
Mhm.
if you look at the S&P 500 over the same time period, it's just been on a downtrend. So for the first time in a very, very, very long time, or frankly ever, the S&P 500 and Bitcoin moved independently from each other.
Yeah.
So
Let
it's
me show
finally
you. Yeah, it's finally like kind of diverging, right? Let me show
and
you.
doing what it's supposed to do, I guess, right? So I'm definitely very curious to hear your thoughts on this.
Yeah, so let me show you another chart, very similar kind of thing that it's showing. So this is the day that Trump got elected up till yesterday, 2 days ago. The only two assets that are up, not the only two assets, but at least the ones on this chart that are up during that period is 35%, which is Bitcoin, and 23%, which is gold. Everything else, the S&P 500, the Russell 2000, Solana, the Nasdaq 100, they're all down. And this divergence, a lot of people are kind of looking at Bitcoin in the last like 3 months or gold and kind of focusing on that price action. But if you zoom out since this election, they're probably the only assets that have kind of kept those gains and continue to increase in value. So I think you're right that that narrative is no longer a narrative, it's actually setting in, where the risk off asset used to be gold, and now one of the risk off assets, it seems like, is Bitcoin.
Bitcoin, that's
Mhm.
awesome to see because that's what Bitcoin is supposed to have been for the longest time, and for the last, I don't know, several years. Geopolitical crisis, war pops up here, war pops up there, and then Bitcoin is always treated as a risk on asset. So everybody's just risk off, and then everybody goes to gold. So it's been really interesting to see some of those inflows going into Bitcoin and people treating Bitcoin as the risk off asset that should be seen as, I guess, rationally. But
Yeah,
yeah,
one
very
of the best investors I know is basically has been like this for the last like 3 months. They are long crypto and short everything else, like the market, the U.S. economy, like everything. And I think that's a pretty like extreme kind of position, but it makes sense. Like if you really think the world order is falling apart, then you should be short the world order and you should be long the new order, right?
absolutely. So that was actually the last thing that I was going to mention before we move on from this topic is I think one of the reasons why many people, me included, have been so maybe not fixated, but like have been paying so much attention to this changing trends of like, oh, tariffs are happening in the US, having this very much like inward turn and stopping the projection of power and influence and turning inwards is that a lot of people are associating this with the fall of the current world order and the beginning of the downfall of the American supremacy and the American leadership in the world. And if that's the case, then a lot of people are worried about how do you position yourself for this new order that is meant to emerge. And I think that's why people get very fixated with like, oh, tariffs are happening and this is going to change everything. And then next week, something else happens and then this is going to change everything. But my question, I guess, for you guys is how do you filter out whether this is actually happening or not? And then how do you kind of like allocate yourself to the possible hedge of, okay, maybe this is actually the beginning of an end? Because in the chart that you showed, yes, so long as inflation keeps happening, you should be investing in the market and so on. Wars have been in there, um, bombs have been dropped, financial crises have happened. But in this entire, I don't know, 100 or so years that your chart encompass, all of this has been the time period in which the United States has been the leading world power, like a growing leading world power, a growing power in the world. But empires fall, right? And empires will continue to fall and have always fallen, and it will inevitably also happen to the United States. So the
Mhm.
question here is like, because and that fall is very much systemic. That is not just like, oh, it's not a blip anymore. It's like an actual systemic downfall, like what happened with England, and before that with Spain, and before that with the Dutch. And historically, you can go back and councils of empires have gone through this process. So how do you, because none of us have dealt with this before, right? So how do
Mhm.
you
Mhm.
prepare for those actual changing world orders and the
Mhm.
actual downfall of the empires? Because frankly, many people think, me included, that we can be getting close.
Mhm.
Maybe some say that we're getting closer than others, but in all case, like, that may not always go up so long that charge ratio will probably continue to go up so long as the US continues to be this leading world power, but it may not be always the case, right?
Yeah. Like I want to show you a chart, but it's like from our pitch deck, and like I don't want it to be like I'm not trying to pitch our funds, but that kind of lays this out. Like it lays out like how we think we've positioned ourselves differently, but to give you like basic ideas, right? Not everything in the economy is as physical and as trade related as it seems, right? In the short run, the correlations always go to one, and that actually is a fantastic opportunity because people are just dumping everything, right, for liquidity. And you just have to be a little bit discerning and say, okay, well, these 10 companies are actually going to be impacted with these trade tensions, but these 20 are not. And if everything's correlation is one, well, that's a buying opportunity for the 20 that are not getting impacted, right? And so you actually don't have to be that smart. You just have to be just a little bit discerning. And it was funny yesterday. One of our big positions went up about 10% in a day, and my partner was upset that that happened because he was hoping to build an even bigger position, and they reported really bad earnings, like one of the worst in like many years. But instead of the stock going down, the stock went up. And so he was upset about that. And that shows you the mentality of like a long-term investor. A short-term investor is like, oh man, I made 10%. This is so fantastic, right? A long-term investor is like, dang it, I lost an opportunity to buy more, right? And so I think a few things to think about. The S&P 500 itself is very large cap, large businesses. They are almost always multinational companies, right? And they're also almost always very dependent on global trade. And so it's not to necessarily say just like buy everything and you're going to have the same result. It's there are real concerns with like the world order changing. And so you can be bearish on the S&P 500 and bullish on many companies inside the S&P 500 or outside the S&P 500 at the same time, right? And so that's where the active management comes in, right? And so to us, like this is the golden age of active management because correlations are one, and there's some companies that are fully digital. There's some companies that are not multinationals. They're actually like very concentrated in like a specific region. There are certain companies that are already profitable and already scaling. And those companies you can be long on, and you can be short the companies that are affected by all these things, right? So if you really want to do something while staying in the market, there's ways to kind of address these risks without getting out of the market into something like cash. Because cash, as we saw in that chart, is the only kind of asset that over 100 years is guaranteed to lose you money, right?
Yeah, yeah,
All other assets, they have volatility, but they have upward and downward volatility. Cash is pretty much the only asset in the world that only has downward volatility,
yeah. Stable.
right? Now it feels stable, but it's not stable at all. And so that's why I'm saying, like, if you really feel like you have to do something, do something. But I think the kind of wrong answer is getting into cash.
Yeah, this is really interesting. I guess we could spend hours on this too, like questions on, oh, but how do you even buy the dip if you don't have cash sitting on the sidelines, and how do you manage a healthy amount of like dry powder to be able to deploy in moments like this and so on. And one last thing that I want to note, and this is actually the last thing, and then we'll move on. But one last thing that I want to note is that the the U.S. dollar, especially when you do currency to currency comparison, has been plummeting in comparison to many of the other world leading currencies. Um, Chinese currency, euros, pound
Swiss
sterling,
francs, yeah,
it's
Swiss
been
francs. Yep.
way down. Swiss francs too. All of the hard currencies way down. Bitcoin way up in comparison to the dollar, or if you want to call it that way, you can also say that the US dollar is way down in comparison to Bitcoin.
Bitcoin,
What's happening? Why is this happening? Is everybody starting to like flee? Is everybody starting to flee U.S. bonds, or is everybody starting to like get short in the U.S. Or what is your take here?
yeah, I think it's like people are essentially this is a flight to safety, and typically the flight to safety has been actually the US dollar. But they're thinking about actually the Swiss franc against the US dollar is probably the most dramatic out of all the examples you gave, because people see the Swiss franc as like, the most neutral, the most like not dependent on trade, the most like friendly with the most countries, right? Like it's not a China, it's not a Russia, it's not an India, it's not the US, right? Like it's like the most neutral that you can be. And so, yes, it's gone down against many currencies, but it's gone down the most against gold, Bitcoin, and the Swiss franc, because those are considered essentially the neutral playing ground and the neutral playing field. And so it's just a flight to safety and a flight to quality. And historically, that flight to quality used to be the treasuries, the US treasuries or US dollars. And right now it's like kind of the opposite. But again, it's like it's just to me, my personal opinion, it's a short-term thing. The U.S., the world order is not changing. It takes a lot of political will, and honestly, I don't think you can really do it in a democracy. Kind of make these types of changes. There's just too many controls, too many checks of power. So, I think in order for the world order to change, you need kind of like Russia or China to kind of make that happen. If they're fine with this world order, I don't think a democracy is really going to change it.
Good. Okay. Definitely interesting trends happening, and I'm sure we're gonna revisit this topic very soon. I feel like the this entire this entire journey and this entire charade is not over yet. So we'll see what else comes out of it in the coming weeks. But okay, let's talk AI. I mean, as you proposed this topic, right, which is interesting. So I'm definitely curious to see what seated you to like or what inspired you to bring this topic of conversation. And then Brandon, definitely very curious to hear your thoughts on what you see exciting happening in this space.
Yeah. This is Brendan's topic, but to me, the reason I was thinking about it is a lot of the times when I hear any criticism of all this AI, it's like, oh, it doesn't get it, like it's not there yet, and people like completely dismiss the entire thing because the current state of the models and their reasoning capabilities isn't there yet, right? And all technologies are built this way, they're incrementally getting better. And so I was talking about this with my team the other day. Hey, it doesn't matter what it is today, we have to be so dialed into what's happening, because when that kind of real shift starts to happen, if you're just an observer from the outside who's been skeptical the whole time, you're not going to catch it fast enough. You're going to be the one that gets disrupted. So that's what really kind of made me think about this. I'm by no means an expert here, but my question sort of is like, can we even clarify what's happening when you send a question to an LLM? Because it feels like it's reasoning, but I think if you really kind of understand what it's doing, which I think you guys will be able to explain better than me, it's not really reasoning. It's kind of like remembering from its memory and kind of predicting what the next word probably has to be, or something like that, right, Brendan?
Yeah, I think I don't hate the reasoning descriptor. I think it was kind of funny for a while for the technical groups because they're like, you're just making it talk to itself before you respond to users. But you could argue that's what people do, like your short term thing or your type one and type two thinking. Um, I think the biggest pushback that's pretty justified is next token prediction
Mm,
as like methodology for getting to ASI. I don't think it's clear or not if that actually could bring us to AGI. It probably could actually by like
mm,
most people's standard. Um, but yeah, this is an open question. I'm like broadly pretty excited about the new modeling approaches that are coming up. But I think one thing that we find time and time again is the models are only as useful as the hardware that they can train on. So
Okay.
unless the hardware is like suited for the models approach, I think we're still in for a nice LLM and diffusion model future. So mostly
Mm,
transformers,
mm.
What
those two
modeling
model
techniques are
types.
exciting you?
So I've always enjoyed graph transformers or graph
Okay.
convolutional nets. Um, I think it's a better representation. So it's a similar like modeling approach, but the actual tokenization or the actual representations look a little different. And then there's some energy based models they're called where they're more probabilistic. So this
Okay.
is like Jan LeCun at Facebook at Meta. He's big on these. They refer to them as like world models. So they have like there's like a physics component a lot of times, and you can train them in an RL fashion in many
You,
ways.
you should take a look at Hamiltonian neural nets too. That's Peter, my co-founder's entire research has been focused on
Nice,
that. It's
nice.
you can actually you can train Hamiltonian neural networks to solve specific physical problems. But basically, the idea of implementing a physics-based approach to model design to hopefully build models that have better understanding of physical systems. So that's also an interesting part of research that he continues to look at to this day.
Yeah. What do you see, Hamiz?
Dude, like I just know that there's more out there when I see all these investment investors like foaming at their mouth trying to get into like the next like LLM company. I just seen this so many times with so many different technologies where anytime there's consensus in the investor community, they're always wrong, right? Like if they're just always wrong. It's like so funny that they call themselves like they call everybody else like the dumb money because whenever I see just like this like intense consensus happening, they're just always so wrong. And so
And what is the consensus right now then?
it's just like LLMs are everything, and everything is going to be solved by LLMs, right? Blockchain was like this. Before that, mobile application, like, it's the same thing. It's like every problem in the world can be solved using blockchains. Okay, that's the time that you sell all your blockchain exposure, right? Right now, it's like everything in the world, AGI, ASI, and everything in between, it's all going to be LLMs. I'm like, okay, I know that's not the right answer. That's how at least I try to think. I don't know what the right answer is, but I know that's not the answer. Just because every guy and his mother thinks it is.
I think we're sold that some of these technological changes happen way faster than they actually do. Even in this day and age, man. Like, I mean, if you consider the beginning of the internet, the beginning of the social internet or the public internet to be like, I don't know, the 90s or something. I don't know. I would say maybe the internet had changed the world by the late 2010, the late 2000s, maybe
Sure,
20 years it took for actually, for like a
sure.
very transformational technology to actually come through and say, yeah, everybody's super connected now. Every business has a website. Everybody like, I can talk to you guys and I can record a podcast fucking online, right? Like
Hmm,
that's insane,
hmm,
right? That was
hmm,
unthinkable, 20
hmm,
years ago. So I think
hmm.
it's going to be a similar thing with this. I
Okay.
think changes happen faster, tend to happen faster, but it's not going to be like not a 1, 2, 3, 5 year thing. I think for us to actually see like society was fundamentally changed by AI as we have it, or society, or at least finance was fundamentally changed by blockchain. 10, 20 years from like the inception. I mean,
Hmm,
we're not even 20 years into the creation of Bitcoin, right? So,
hmm, hmm, hmm,
and we see Bitcoin actually being like one of the
hmm.
largest assets right now. So
Yeah,
I think
fifth
if
largest asset in the world now.
yeah,
Yeah,
yeah. So it's happening, but it just takes us slower than most people like to admit that it does. At least that's my take.
yeah. Interesting. Yeah, I know there's more out there. There's more ingenuity, there's more capital out there that's going to solve like bigger. I am like I said, I'm not an expert. I just don't see how I don't see how LLMs get us to AGI. It just doesn't make any sense to me. I think these are simple like memorization models. Like my simple brain thinks of them as they just have memorized a bunch of answers and they spit out those answers when you ask them a question. Like I don't see how they're reasoning. Like it's just, I don't know.
I think I want to hear Brendan's thoughts on this, but I I think there's no reason to believe that the way that humans reason is the only way that reasoning can exist. And maybe I don't know. Maybe you can. It's murky how human reasoning actually happens, but maybe I don't know. Like there's some like abstract learning that's actually happening in your brain, and I can show you something once so you kind of like understand that conceptually, right? It's very different from like predicting the next token. But I don't think I just don't think we're able to say that next token prediction is not reasoning if we just expand the definition of reasoning. In the same way that like if there's some other like generally intelligent species out there in the universe that they reason in a different way, maybe they I don't know, maybe they
Mm.
like make different. Maybe they have like some wave state in their brains that like collapses into some idea that they have, and that's the way that they think, and maybe that's reasoning, right? Could also be the case, right? I think maybe doubting that current LLMs reason is a phenomena of anthropomorphizing the technology. I think is a fundamentally different way to understand things. It's not the way that we do it. It may not be as efficient as what we do. It may not get us to like the level of generality that we have in terms of, not in terms of intellectual capacities, but like physical capacities. But it is reasoning, at least the way that I see it.
Interesting. No. What do you think, Brandon, they're actually like reasoning these models?
For general intelligence, I don't think the bar is very high.
Okay.
Like, what are we talking for reasoning? This thing knows more than every person that I know. It's
Yeah,
just
it's
like
insane, man.
Wait, but it remembers it, right? That's my point. It knows
doesn't
it.
matter. Doesn't
You
matter.
don't think it matters?
No. Why do you like? Why does it matter how it's done?
No, I mean like reasoning to me, and this is my basic is like it's able to think through a problem it's never seen before. And to me, LLMs can only think through problems they've seen before.
You can't pose a problem that hasn't seen before, I think is my argument.
I know,
That's
but that
what the
doesn't
art
that doesn't
challenge
change.
is.
No, I understand. That's
Yeah.
I agree with that. I agree that
Yeah.
it's going to be hard for me to give it a problem it's never seen before, and so it can answer all my problems. But it, like in theory, if I gave it a problem it's never seen before and it can't solve it, it's not reasoning. It's just memory recall. Like that's all it is.
Can you solve a problem that you've never seen before, though?
But
Like I'm a
like,
human.
Yeah, humans do that all the time.
I would argue general intelligence of a human on a completely novel problem would struggle.
Okay.
But
Yeah.
it also depends on what you define as novel. Like if I give you a physical problem of like, oh, figure out a way to unbox this, or like those puzzles, right? The little puzzles that you need to like solve. I think that's a really good example. That's not a new problem. Like you've seen the puzzle itself may be new, but like how you handle that and what fits into what, or like knowing that a triangle is not going to fit through a square, or that a square is not going to fit through a circle. I think all of those are things that you already know. So
I
I
know,
think
but
there's a lot of
humans, like everything that humans have created, the first time they created it, yes, they drew from all the experience they had so far, but the first time they created it, that was a novel problem that they created. Right?
Nah, depends where you cut
No,
it.
that's not novel.
I think there's a lot of human generalizations, and we just move in a world where everything has been generalized. And I think maybe that's something that models don't do that well. And maybe I guess my take is that it's a consequence of the fact that like they don't really interact in a physical world. But generalization is a really unique thing that humans can do. Like I know that a door is a door regardless of where the fuck I see the door, or whether it's the first door that I'm seeing in my life or not, right? But I think when it comes to just like mental reasoning, if you take away the actual physical acting in the real world, I think LLMs are like, however they do it, I think they're
Okay.
way past what any human can do.
Okay. No,
Maybe
I
they
agree
don't
with
generalize.
that. I agree with that. I'm not disagreeing with that. I'm just saying that, okay, well,
No, it's tricky. I definitely think it's definitely different. It's definitely a different way of intelligence, a different form of intelligence. But I don't think I don't think it is not reasoning, and I also don't think it's relevant to say that it is not reasoning because
okay, so you think that recall is essentially reasoning.
but it's not necessarily recall, man. It's not just recall. Like if I ask it even just like an objective
How do
question.
you know when you're reasoning and you're not recalling?
Yeah, that's also another really good question. That's a really good question. Because if I ask you, if I ask you what's the capital of Switzerland, um, you probably have the memory stored somewhere, but it's not like it's not recalled the same way that like I look up a database, right? Of course, like there is some level of understanding that emerged from being able to predict the next token of like countless of Word documents on the web, right? So I think there's understanding there, and there's
Yeah.
understanding that has emerged, and maybe it's similar to the understanding that you have that has emerged from your physical experiences. It's different. We definitely are not next token predictors, but I still think it's not just like a basic simple lookup or
Okay.
recall.
Okay. Fair. Okay. Something for me to think about more.
Yeah, and we can always revisit this as well. But okay, we're at the 40-minute mark. Any final remarks here that we wanna share?
So we think we can get to AGI with LLMs.
I think it goes back.
I think we could, but I don't think we will.
Okay.
I think all progress could stop, and you can just keep training these things up, and you can get there with just LLMs. However, I think the money will flow towards the best use of the dollar, and it will end up finding probably some other solutions which we wouldn't when it happens we'll probably say it was LLMs plus this one thing. But I think you could get there with just LLMs.
Interesting.
I think it goes back to the definition of AGI, which is a discussion that we had a few months ago. And by my definition of AGI, we don't get there with LLMs. And my definition.
Go on.
An update. Go ahead.
I was gonna say what's 1 year from that recording, because we gotta like make sure we do it on that same day, and then do like a little side by side and see. We have to record the new one without looking back, and then we gotta go and you do a side by side and figure out what we said.
Right.
No, but by my definition, we don't get there with LLMs. I think my definition was something along the lines of the same physical entity that houses the model, if given the ability to act in the world, can go and drive a car and can also go and cook my breakfast and can also go and figure out the Riemann hypothesis. We don't get there with LLMs.
I think AGI by next year. Very confident. I'll take that.
Okay.
Maybe I was almost gonna say end of year, but I'll push it off and say next year.
Okay, good.
That sounds aggressive, Brendan, but let's see.
Yeah. We're fundraising. I'm just kidding.
I'm in. With that level of confidence, I'm in.
No.
Good.
It's serious.
All right, gents. Well, thank you for the phenomenal chat, and then we'll be back here in 2 weeks with a new episode. Thank you all.
Stuff.